Warning: the views and opinions expressed in this program are our own and/or those of our guests. They do not necessarily reflect the views or positions of our employers. Viewers' discretion is advised.
Problem is when they charge it to the escrow,
Yeah.
then it's visible, right?
So a
when
closing
you get a
statement, yeah.
closing
Oh man,
statement, you
this is
get audited.
very good specific stuff. I like this. Yeah, no, you're right.
There's so many BDOs out there that just throw deals against the wall and just hopefully it sticks with their credit team. It's like if you have some downtime and and they're not lending, like take that time to refine your skills.
This doesn't apply to me because my volume's actually up, so that's what I gotta say.
Cocky. I love
I'm gonna
it.
sit this one out.
His volume's always up every year.
Like you literally look like your hands are tied behind your back and someone's shining like an old VHS like camcorder on your face.
Do not really show up, huh?
Yeah.
Yeah.
When you put your hands in front of your face, you completely disappear. I don't know what you're laughing at, Daniel. You don't even have a camera. So
Hey, my iPhone 12 works just as fine, right? I mean, hey, for the record, I just stole my next door neighbor's coffee shop's Wi-Fi, so I got Wi-Fi now. Y'all like that?
you get cheaper and cheaper every episode. He's got to save it all for the
Start selling that
table.
Wi-Fi to other people and stuff now.
You're the richest poor man I know, man.
Yeah.
That's how you stay rich. Yeah, you gotta pay Uncle Sam.
Then we pop bottles, but you can't get a camera.
So when we were all in Arizona for the BDO retreat last year, me and Daniel and Jared Johnson and Madison, we all went to the casino. Maybe I think there were other people there, but I don't remember anybody but them. And I got a glass of wine. And I went to go gamble, and I spilled the glass of wine all over the roulette table. And I just ducked down to the floor and crawled out so nobody knew it was me. And everyone's like, where'd you go? I just left all of the money that was not mine on the
and
table.
I was there last week when I was at the launching conference. I literally took a picture of the exact same roulette table. Emily, remember this?
Yeah, he goes, Emily. I go, yeah, you're missing the big wine stain on it, though. It's funny. That's what happens at the BDO retreats. Speaking of, we have one coming up in January.
It's in January?
Sounds like a good time.
Hey everyone, welcome back to the BDO Show, a podcast for BDOs by BDOs. I'm your host, Emily Detor, and I'm here with my fellow co-hosts, Andrew Chang, Daniel Park, John Chung, and returning guest, and I believe he's going to be sticking around, Zach Bennett.
Yay!
Yeah. At the beginning of each episode, we're always going to remind you to send over your topics and suggestions, like and subscribe, and send those over to the BDO Show at artofsba.com. BDOs. Have you ever had a borrower bring in like a brother-in-law to do their life insurance? Doesn't end well, does it? We've all been there. When you require life insurance on your SBA loan, it's critical that you bring in a company that specializes in getting these policies in place for the SBA loans. The last thing you want is for life insurance to be the holdup. We all know that's a rookie mistake. SBA Protection Quick Close Life Insurance is the fastest, easiest way to secure the insurance protection that your borrower needs for their SBA loan. Their process is simple, hassle-free, and only takes a few minutes of your borrower's time. No lengthy paperwork, no complicated forms. They even have programs that don't require labs or doctor records for approval. And best of all, you will have the collateral assignment back in less than 24 hours. It's a no-brainer. Go to SBAprotection.com for more information or email Adam Bergen at adam@sbaprotection.com. Okay, so today's episode, we are definitely going to be talking about defense in the market, defense in many aspects of the SBA world. And John, why don't you go ahead and give us a rundown of what we're going to be talking here about today?
Yeah, I think it's kind of free flowing, but kind of playing defense. It's just in the marketplace right now. Obviously, there's a lot of changes going on in the marketplace, and a lot of banks, I think, are being a little bit more conservative and trying to hold on to their current assets rather than necessarily grow. And if they are growing, they're being pretty particular how they're doing so. And then I think we'll talk a little bit about the brokers that we're dealing with and kind of what we're seeing from the brokers and or referral sources. And then a little bit of rundown SBA 504 versus 7A, what we're seeing in kind of marketplace.
Okay. One of the questions we were chit-chatting about earlier was, we're talking about banks playing defense right now, as you just mentioned, and they're trying to maintain their portfolio, and they're not necessarily interested in funding new loans or bringing in new relationships. But how do we think this has changed the lending landscape?
I think, a lot of banks, smaller banks, community banks, regional banks, kind of have their commercial pillar. And they have their SBA pillar, right? A lot of times on the SBA 504 side, the commercial bank will run with those kind of transactions, and then 7A is kind of separate. 7A/USDA is kind of separate, right? So I think because the commercial banking groups are being a little more conservative because their default rates are going up as well, right? Just like SBA. I think their livelihood is a lot of deposits, right? So they're trying to maintain them. So any of the credit facilities they have with those deposits are kind of at risk, right? So I think they're trying to work with their borrowers to try to keep them happy, doing a lot of in-person meetings, trying to make sure that they don't take their deposits away, right? And deposits in general are somewhat starting to shrink as well, right? You always have the investors on the sidelines with a lot of capital, but in general, I think deposits are the livelihood of banks. So as they're being a little more conservative, right? They're turning to the SBA department. It's like, okay, you guys are going to be the driver and a lot of this fee income, or they're saying, hey, since we're being conservative, maybe we should look at the SBA side, be a little more conservative on that side of things, right? I was talking earlier with Zach, and I think all of us actually on this phone, we don't require deposits at my bank to do an SBA 7A loan or a USDA loan for that matter. We have a group that's a commercial banking group, but they're interested in keeping the customers in the brick and mortar side up by where they have the branches, which is nowhere close to me anyway, right? So I think that's kind of the playing defense aspect of things. I see, with the defaults going up, I think a lot of banks are just trying to maintain their portfolio, and I don't think necessarily stop lending, but I think they're being much more picky on what they are lending on, especially in the commercial banking group, and it's kind of having a ripple effect with the SBA side.
To add on to what John just talked about, I think you have to see both sides. Throughout the times, we've always seen different types of SBA lenders, right? The ones that thrive during the worst economy because they are doing the commercial deals that are getting turned down, whatever else, and because they have the guarantee, they could be a little bit more courageous in their outlook of credit and things like that. And there's the other type of lender where they all freeze up. We're not doing lending, period, for like 6 months to a year. And we've seen that recently too, right? During COVID. And so, if you're with that type of lender who tends to thrive during the downturn in the market, then I think, you might be in a better place and you really try to get what you can get out of that time frame, 6 months to a year, whatever it may be, that dip. And if you're on the other side, I think you really have to go back to the conservative ways of the traditional banking, and I think you might want to fall back on what your bank typically specializes on, right? So if a lot of times I've seen banks stick to their core industries. If you're a car wash lender, if you're a hotel lender, if you're a restaurant lender, they'll go back sort of to what they know well. So maybe try to stick to those industries and try to get some deals out that way.
All right, guys. So just kind of walk me through the depository relationship side of things.
As far as my bank goes, I think we're making more of an effort to try to make this into an SBA bank because think the president of the bank realizes that really SBA is where the money's at right now, especially with the how things have been. I think we're more SBA fee income driven than ever before. You got the nice guarantee from the government as well. So I think that's the direction that we're headed, right?
On the commercial side, banks in my neighborhood, in my region, have been requiring deposits since at least a couple of years ago, it seems like,
Yeah,
right? I tried to refer commercial deals and they said, how much deposit can you bring in? I'm like, what?
yeah,
It's been a couple of years like that.
yeah.
So it's really, if you go back, it's really nothing new. It's sort of started not recently, but it's been progressing that way, I think.
To kind of piggyback on what Andrew said, with our commercial banking side, because we're a small bank, right? Let's face it. So we are relying on these deposits, and for us, we are encouraging more C&I lending, if you will, where we do require deposit relationship, right? So that's kind of like one segment of what we're doing. Now, the other part, obviously, is the SBA, which is basically the almost like the flagship of where our revenue is coming from is just fee income, right? So we're trying to get the deposit from the C&I side, and then we're also gonna rely on the fee income from the SBA 7A side. I think that's kind of like what our bank is doing. But what I've noticed is that on the commercial side, we have been scaling back on commercial real estate lending, right?
Hmm.
And we're trying to push more towards the 7A real estate versus the, conventional lending piece. And that's what I'm seeing a lot more of here at my bank. Yeah. And I'm not sure if that applies to you guys, but that's what I'm seeing here. Yeah.
No, I think from our perspective, like they're like Daniel's saying, we're kind of segmented, right? There's a C&I side of the bank that is
Right.
trying to. I think they're slowing down a little bit. They're trying to retain deposits. They're trying to retain loans. They're doing
Hmm.
modifications, from what I'm hearing, to try to save stuff. And then on our side, we're hearing, why aren't you funding more deals? Like we're actually trying to bring more people on board. We're trying to fund more deals. So we're staying fairly aggressive. I think we're trying to take advantage of some of these bigger banks that aren't lending. And so
Yeah.
it's kind of a wide spectrum. I'm doing some really aggressive, creative financing stuff on my side, but then there's also some deals that fall through that I'm like, this is a good deal. Like, why isn't Wells doing this deal?
Right.
I don't see the issue here. And so we've been able to get some of those deals through too. I think that maybe have fallen through the cracks. So we're kind of like, there's kind of two things there, right? There is the retention, kind of playing defense on the C&I side, but for us, we're just trying to grow.
Okay, let's go ahead and talk about, defense with brokers now. Let's pivot this way.
Hmm.
So we all know volume is a little bit down right now, and the competition can get higher, especially in the 7A world. How has that changed, and how are brokers or referral sources working with the BDOs when this happens?
This doesn't apply to me because my volume's actually up. So that's all I got to say.
Cocky. I
I'm
love
gonna
it.
sit this one out.
His volume's always up every year. DP.
For some odd reason, when Daniel's cocky, I love it. Sometimes other people are cocky and I'm like, ew, stop. But when Daniel's cocky, it's hilarious. So for all the low volume people out there, why don't you answer?
Yeah. For myself, I mean, I deal with referral sources in general. It doesn't have to be like mortgage brokers. I'm gonna hold a license or anything like that. And a lot of bankers will like that because since we're not taking deposits, right? I'm not gonna jeopardize their kind of relationship on that side of things, but I can also fill a need for their borrowers, right? And they get paid on it as well, right? So I think the brokers are really good. They aren't trying to squeeze out a ton of money on just one deal. And they're looking more on the relationship side of things. They're looking more like they just want to get it done. The path of least resistance, right? But Daniel's shaking his head like everyone wants more money. But
Yeah, dude. And I'm like, come on, man. I mean, here, there's a deal for $500,000, right? This guy's trying to squeeze an extra quarter of a point for me. I'm like, JFC, bro. It's really $1,250. Like, I'll Venmo you that if that's what you want. It's like,
yeah,
we're like, where does it stop, man? I mean, you know what I mean?
yeah.
But
I think a lot of
it,
the lower producing brokers will
yeah,
try to catch
man.
up by charging more
Yeah,
now because they didn't have the volume that they had in the past.
exactly right.
Are you guys finding that from like MLOs? Like I get a lot of requests now from like mortgage loan officers. I don't know if you guys come
Hmm.
across that. And they tend to kind
Yeah,
of want a little
dude.
bit more money, and they
It
don't do
it
anything.
Yes.
They give you a name and a
it's straight
number,
up.
and I'm
Hey,
just
what
like,
is your rate and how much are you paying? It's like, come on, man.
yeah,
Yes.
yeah, because I think those
Yes.
guys are
Right?
starving
Yes.
right now, unfortunately for them. But yeah, I
Yeah,
see a
I
lot of
think
that
I
right
think
now.
that's the case, and they're just they don't realize. I mean, I think they don't realize it's a relationship. It isn't necessarily like a transaction, right? When I deal with
Yeah,
people, I try to keep a relationship rather than a transaction. A lot of
Yeah.
those transactional people, I'm just like I don't really want to deal with you because I'm probably not going to be the person that's going to give you what you want every time.
So how much are you
Well,
paying, John?
yeah,
Just
same.
kidding.
the,
We'll
He's
talk
not
later.
kidding.
yeah, the thing that I have the most difficult time, which does happen over and over at every cycle, is the time lapse issue. During the downturn or uncertain market conditions, what a lot of banks will do, let's say there's 10 banks out there and five of them will become very conservative. And these brokers come with an inquiry and say, well, so and so bank would do this deal in a heartbeat. And me telling them, no, they're not anymore, not at this time, that actually doesn't matter sometimes, right? Because they're like, oh, he's lying. And then they go back to that other bank that they mentioned. Or same thing with referral fees. Oh, so and so bank is paying this. And I talk to them and I know that they stopped doing that because of the market conditions. And but the broker is fixated on 6 months ago, a year ago, right?
Yeah.
So for me, that's the most difficult thing, and a lot of them end up walking away because they just don't believe me when I'm telling the truth.
But Andrew, do you find that a lot of those people come back to you after the fact?
These are obviously not my core brokers. My core brokers stay with me no matter what. It's
Yeah.
like if I tell them this, they go, okay.
Yeah, they
They
all
work
come to me
out.
because I pay the highest in the industry, though, but we're not gonna go there.
Hey guys, we have a special announcement for anybody involved in M&A transactions. Our partner, Peak Business Valuation, have put together a resource just for BDO Show listeners, and they're giving it away for free. It lists out the rule of thumb formulas, or as Krogi would like to say, the down and dirty, for some of the most common industries that SBA lenders finance. I promise you it's going to come in handy. Krogi's literally still using the one he got from Nagel in 2002. By the way, if you're not thinking about evaluation at the pre-screen phase, you are missing the boat. A lot of BDOs tend to focus on the debt service coverage, and they're missing the valuation completely. That's a rookie move, and it will become a problem. As a consultative BDO, you should have a sense of whether the business is going to value out, and Peak's handy-dandy rule of thumb is here to help. Go to peakbizval.com/BDO show to get yours today. Do you find that brokers like in this kind of playing field right now, they try to increase or maximize their fee and you're just like, what the heck?
Like, what is double dipping kind of a thing? I mean, I don't know about
Yeah.
that, but
Yeah.
I'm sure it happens, right? And it's not allowed. It's frowned upon, but I'm sure people do it. You know what I mean?
Yeah, I just had a deal the other day. The guy was trying to get 2 points from the client. They wanted a point for me on the
Yeah.
504 first and a half
Yeah.
point on the second. And I'm like,
Yeah, so they're charging the client direct, and then they're also getting a rebate from the bank. Yeah, people do it all
Yeah.
the time, but
They have a fee agreement with the client,
Exactly,
right? So
yes.
they're protected. They have a fee
Yeah.
agreement with the client, so they're
Yeah.
protected, and that money gets dumped into escrow or sub escrow, however you want to do it. But at the same
Yeah.
time, we're paying them kind of quasi in the back end, right?
Exactly.
Like
So
a
they're double
7
dipping. Yeah.
Well, I
Well,
just had somebody ask a question about this actually yesterday, but per SBA regulations, you're not supposed to.
Exactly.
right?
Yeah.
I mean,
And by the way, the borrower is going to sign that document that says we're paying you. So it stipulates that we are, but it's going to be disclosed, right? So
Yeah. Exactly. Right.
so we actually do an invoice for them, which says they're not charging any other fees. So if they
you
do it,
do.
it's on them, right? But
Exactly right. Yeah.
the problem is when they charge it to the escrow,
Yeah.
then it's visible, right?
So the
when
closing
you get a
statement, yeah.
closing
Oh man,
statement, you
this
get
is
audited.
very good specific stuff. I like this. Yeah. No, you're right.
Yeah.
Yeah. So some of the wiser brokers, right? They'll go ahead and just charge a fee outside of escrow, right? So it doesn't
Yeah.
go through escrow. So we don't know, and how do we police that, right? So we just go out, work off of a good faith, I guess, if you want
Or
to call
sub
it that.
escrow, right? They just keep it off the closing statement.
Yeah.
but you said you're not allowed to per the SBA. So can't anybody get in trouble for this? Like eventually?
Well,
Yeah.
Sure.
Oh,
Yeah,
we
I
got
mean,
some quiet.
no,
Hey,
no,
man.
so that's why we do
Hey,
the invoice, and it certifies that they're not charging other fees. So
yeah.
they end up charging it somehow, right? And they get
Right.
caught. It's really on them because we tell them up front, you're not supposed to charge for anything else. And
Mm-hmm.
here's the 159. You explain the 159,
That's
and
true.
then
Yeah.
I explain the
Yeah.
invoice, and that's it.
Hey,
Yeah.
Emily, are you allowed to text and drive? No, right?
I guess no, not in any
I'm
state,
just
right?
saying. Hey, but if you get caught, you got to pay the fine. That's the way I look at it.
So this can't come
Yeah.
back on the lender then anyway, like during an audit or nothing?
I mean, my closer on my team will catch it. It's on the closing statement. So if
Yeah.
they see that, then we
That's
we
through
will pay
escrow,
them.
right?
It's one of the you have to pick one of the other. You can't have both.
Right.
Yeah.
Okay.
But
It's
if they're
either
doing,
off
like these guys
escrow.
are saying,
Yeah.
if they're doing something outside of escrow, we don't know that. But I mean,
Yeah.
we make it very clear that if we see that, then they're not allowed to do that.
Yeah, and this is
So,
where you
I
got to really
mean-
play defense.
That's the defense. Yeah.
Yeah.
Okay, so let's go ahead and pivot into 504 versus 7A. John, kind of explain the difference between paying brokers there and what the deal is with all that.
Well, I can only speak on, we just launched our 504 program. I can only speak upon how other institutions have done it, or I've done it in the past. Oftentimes, we'll throw it in as kind of like a bridge fee on a second, right? If they want to kind of quasi get passed along to the broker. But the problem with that it's on the closing statement. It looks really weird because all of a sudden there's this big fee on the bridge fee. It looks like the
Yeah.
bank's doing it, but
Right.
we're really passing it along to the broker, right? So the cleanest way is if they have an agreement with the borrower, right? For getting paid at, point on the first, and second, whatever they have, agreement on that. So it's fully disclosed. We get that agreement, put it into escrow, and everyone's aware of that, right? And none of our funds is going to finance that. The borrower has to come in with that money. They already have it in, and that's the cleanest way, right? But a lot of banks are doing it different ways, right? Institution I used to work for, they would throw a big bridge fee, right? So the referral source actually didn't have an agreement with the borrower, right? They try to run it like a 7A, which is a little bit difficult for the bank to do, right? Because it's not the same kind of product, right? And it's going to stick out like crazy on the bridge fee if you throw off and it's going to the broker or referral source of some sort. So, I mean, that's kind of the difference that I see. But I mean, you guys,
I
what
have
do
a
you guys
question
see?
about that, John. So, is the borrower aware that some of this fee that you guys are collecting goes to the broker, or do you disclose it at all, or is just
It's a dicey thing because you wouldn't have the deal unless it was for the broker, right?
right?
So you don't have the deal, right? So then it's a discussion. We have some brokers are very upfront. They'll be like, yeah, that's my fee, right? We talked about this, right? To the broker, to the borrower, and then it's easy because that's their job to explain it,
hmm
right? If they don't explain anything, and then it's a little bit dicier, right? And it's
hmm
like, yeah, I don't know what to tell you on that side of things. Different banks can do different things. I don't like working that way because it just looks like the bank is hammering you for a huge bridge fee,
Yeah,
which
that
isn't
is being,
isn't the
yeah,
case.
exactly, right.
So, how do you guys sell against 504 structures that you're competing with?
I personally do both, so I don't have to sell against either.
Oh, okay.
Ooh,
I'm actually finding because the CDCs are approving everything right now for the
Yeah,
most
they
part.
are.
So that makes it challenging, I think, for if you're just a 7A lender on the real estate side. But I mean, for me, our bank seems to even be okay with a deal that probably should go 7A. They'd
mhm.
almost rather go 504 because of the exposure being the 50% LTV
Mm.
on some of these deals. They don't want to be as high leveraged. So I'm actually finding where the bank's like, I'd rather go 504 than 7A.
What pays you more at your bank? 504 or 78?
Depends on the deal, but it's pretty similar. So it doesn't
Really
really sway me either way. Yeah, that kind of do it that way.
interesting.
So they're not trying to sell something. So I try to fit whatever's best for the client, whatever makes sense.
Yeah, and for myself, I offer both options, but as y'all know, I mean, I mostly do hotels, and we don't really do 504 hotels at my bank. So, but I'll throw it out there. I might say, hey, if you're really adamant about getting a fixed rate loan, I mean, we'll do USDA 5-year fix. We can offer that all day. Yeah.
Yeah,
But I do, especially like on a multi-purpose property, like a warehouse or what have you. Yeah, all for 504 option if they really want, and I'll tell them the pros and cons about a 70 versus 504. Yeah, and let them
yeah,
decide. Yeah, but to be quite frank, what pays me more? Of course, a 7A, right? And
yeah.
that goes for the brokers too. But, you know, and a lot of times deals come to me knowing that they're looking for a 7A option, right? So brokers already kind of gave them the whole spiel of both the
Yeah.
504 and the 7A. So it's a little bit easier sell for me, but if it's up to me, yeah, I'll definitely offer the both products first. Yeah, see which route they want to take. Yeah.
Yeah.
So when I'm competing with the 504 program, there's because I'm mostly a 7A lender. So the two questions that I ask are, number one, how long do you plan on keeping the property?
It's
And
true.
is what you're saying, and if their answer is yes right off the bat, then I ask them, okay, have you really thought about it? You know, how old are you? How long have you been in the industry? You know, when's the last time you bought, if you had your own property before and you sold it in 3 years, then you're probably going to do the same thing again. If it's a growing, it's a growing company, you go from 5,000
Y-
square foot to 10,000 square foot
Yeah, man.
and you're doing well and your sales are going up. I mean,
It-
yeah, I guess another way to do it is to buy another property and have two properties. But I've seen people go through headache. So I try to cover all areas of the possibilities and the feasibilities and things like that. And the other question that I ask is, do you know what the prepayment penalties and how long it is?
Yes.
A lot of times
Mhm.
the 504 lenders give out the term sheets and it says it clearly on there, but they don't read it.
Mm-mm.
Fixed rate,
No one
fixed
reads
rate, fixed
anything.
rate, right? I don't care about anything else. So I think it's really on me to educate the borrower, make the right decision, not just trying to take away business. That's my main thing.
Yeah, and
Yeah.
especially
Yeah,
if you're
that's good.
financing a business, you kind of do a 504 anyways, right? You're really limited to 7A at that point,
Yeah,
right?
yeah.
Yeah, and some bars don't understand that. Yeah, I mean they do real estate
That's
only.
another
Yeah,
question that I ask borrowers:
right.
how many loan payments you want to make? One, two, or three? Hey, we can do it all three ways, right?
What do you guys think that your lending institution brings to the table that kind of sets you aside from the competition? I know, obviously, Zach, you do both 504 and 7A, but like, how do you kind of leverage this?
I think that we're kind of in a sweet spot. Like we're not going to ever compete with like the big banks, but we're
Yeah.
also
Mm-mm.
we're kind of even our competition. We would say, I say we can price it lower than what they can.
Mhm.
Plus we amortize for 30 years.
Mhm.
So a lot of times when it comes down to it, like the payment's not that much different than some of the other banks. And then we also am able to do business acquisitions, whereas a lot of lenders can only do one or like either a 504 or 7A. I'm able to do a biz ac and real estate purchase, which I do get those requests quite frequent. So instead of just doing it all in 7A, I can do a 504. Like Andrew was talking about 3 loan payments, the 7A business acquisition, and then 2 payments, one for the bank and then one for the SBA. So that's kind of what differentiates us, I think.
We do 504 lending at my bank, but it's only in California. We're not going to do it on hotels, right? We're just not interested in doing that. How I sell against the 504 is 2 approval processes, right? You may be handcuffed by the prepayment penalty, not only on the first, but on the CDC portion. Um, sure, you get a fixed rate, but how long you gonna hold the building for? Kind of
Yeah,
to Andrew's
right.
point that he was
I think
talking
that's the
about.
key. Yeah.
The second thing is, nobody has crystal ball, but rates are going down. So why wouldn't you enjoy that downward swing when you're doing it? More flexibility with the 3-year prepay and do whatever you need to do after that point. And that's kind of how I sell against it. Maybe higher leverage at times, right? Depending upon what the deal is.
What kind of parting advice do you guys have for our new BDOs listening in, or even current BDOs on this whole defense thing with everything we've talked about?
Know your deal. If you're a BDO, know your deal. Don't just try to run through it and just not see the weaknesses of your deal, not try to point them out to your underwriter or to your
Mhm.
credit, and mitigate them, right? Most importantly, right? If you don't know your deal, then I think you're sunk, right? And credibility, especially if you're a new BDO, is really important, right? Because most credit folks aren't going to really get to jive with you and get to know you or really trust you for a time period. So if you don't know your deal, they're going to think that your stuff's junk. You want them to be happy to see your deal coming in because at least you know the weaknesses and you've mitigated them and you know how to do your spreads, right? I think that's a big thing.
I just have one thing to say. It kind of relates to today's topic. So whether you're just a 7A BDO or 504 BDO or both, like some of us here, especially for the newer people, I'd say kind of educate yourselves on the differences of each program. So either you're competing or mixing them up, at least get your basics down, not just the structure itself, but how the fees are and what the prepayment penalties are and things like that. So you can properly advise your borrowers. I think that is really what we should be doing. Not just to make money, but we work for a lender or a banker, a bank, or we all do the 7A and the 504 program here. So I think it's your responsibility to know the programs well and then convey the message to your borrower properly.
Yeah, that's good. And I would just lastly say just kind of understand where your credit team is looking for. I think for some because it's obviously an ever changing landscape with the credit. And then if you really are like at a slower like you're at a bank where they're not lending, I mean, just take that time to refine your skills. Kind of like what John was saying too. Like there's so many BDOs out there that just throw deals against the wall and just hopefully it sticks with the credit team. It's like if you have some downtime and and they're not lending, like take that time to refine your skills, learn about the 7A 504 programs more in detail, learn how to cash
Mhm.
flow, learn about what your credit team's looking for.
Yeah.
'Cause I think in the long term that'll help you be successful.
At the end of the day, every episode we speak about the word education. Educate yourself, educate your borrower, um, educate your lender, receive education in any form that you can in this industry, and it's huge. And it's huge to whether you've been in the game for a zillion years, or if you're just starting out, just keep it going, because these programs, they're moving, they're shaking, they're evolving. Sometimes they retract a little bit to stay on the safe side of things. We kind of follow the trends of the nation and what's going on in the market. So it's just all about education and making sure you're staying ahead of everybody else, because it's not about just you, it's about everybody else too, because they're going to also be doing the same thing. They're going to be trying to move forward. So great episode, you guys. Thank you for joining us today. If anybody has any suggestions or wants to hear these guys rattle off some new topics, send them over to the BDO Show at artofsba.com, and we will see you next time.